Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of April 1st, 2024. In this video, we're going to talk about where we are in the S&P 500 year to date, the different sectors and how they're performing. We're going to talk about interest rate cuts from the Fed the rest of this year, and then we are going to jump into the trades on the trade platform, the option trading platform. Before we get started, if you appreciate the time and effort that goes into making these videos and putting the information together, all I ask is if you please hit that like and subscribe button so that we get the video out to more people. I really appreciate it, so thank you very much. I think it's super important that we understand the strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves safely in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks alone outright. Use the link below and open an account with Moomoo. You can get 15 free stocks by depositing just $1,000 and earn 5.1% on your money and an extra 3% for 3 months, so 8.1%. Deposit just $100 and receive 5 free stocks. You get the free charting software that's great, and I use it. You can set it up with all your key indicators, and you don't have to pay for it. Disclaimer, I'm not a financial planner, and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, let's take a look at where we are in the S&P 500. We started the year at 47.43, and today we are at 52.54 in the SPX, which is the S&P 500. So we're up around 10% year to date, and right now the PE ratio is at 21 versus a 10-year average of 17.7. As far as the economic reports coming out this week, we've got unemployment numbers on Wednesday, or employment numbers on Wednesday. 158,000 jobs is expected, and then Fed Powell speaks as well on Wednesday, so we'll see what happens there. And last week we didn't have too much. We had on Friday we had the core PCE and PCE come out. PCE was expected at 0.4%. It came out at 0.3. Core PCE 0.3 as expected. And then if we look at the different sectors and how they performed last week, you can see everything was pretty much up. Tech was down 0.75, so very slightly. Year to date, we're still up. This is that big 10% up, but everything is up really big so far year to date. So I think, we could be due for a little bit of a correction. If we look at and go ahead and jump into, well, actually, let's talk Fed interest rates first. The first cut, 61% chance in June. And, it's expected to stay the same in July. But, you can see in May, we're still going to likely 95%, 5.25 to 5.5. But June, it looks like a 61% chance of the first cut in June. And let's see, the fear and greed index is up at 71, so still fairly greedy. A lot of people are thinking the market's going to continue to go up, even though it's already up 10% this year, and it was up last year. And then if we jump into the FactSet earnings report, which I like to take a look at, we can see that the S&P, the year-over-year growth rate is 3.6% for Q1. And again, this confirms that 21 PE ratio, but 3.6% for Q1. So we are starting to improve. And then if we look further down the road here, Q2, we've got 9.4% earnings growth and 4.6% revenue growth. That's huge. And for calendar year 2024 in total, earnings growth of 11% and revenue growth of 5%. So those are nice expectations. And then for calendar year 2025, continuing to improve, 13.4% earnings growth and 6% revenue growth. Let's see. So let's just go ahead and jump into the trades on the platform. I've got a placeholder here for Apple. you know, everything's been down quite a bit. And you can see Apple. Oh, no, not everything's been down, but Apple's been down. Um, this is the 1 year chart, and we're down at 171 for a company like this with the financials. You know, to me, that's a little bit crazy. My target for Apple is like 200. So, you know, they've got so much cash and so many people use the products that I think this is a good buying opportunity for Apple. So, earnings come out on May 2nd, and I am looking right now just to stay small. I've got a placeholder here for a $5 wide put spread to collect, you know, $177. So I'm going to put that on Monday likely before earnings. Adobe, I've closed out April and moved to May. I can't believe Adobe's been down. My target for Adobe is high 600s. I think it's a great company, great stock, but rolled to May. KeyBank, an analyst came out with an underweight rating due to this generative AI, which I think is kind of BS because there's more needed. That's just the start of the whole process of, you know, using Photoshop and editing videos and photos, and the professionals are still going to need Adobe, but I guess it would cut into some of the consumer business with a simpler way of doing it. But if the serious people are still going to need Adobe, everybody uses Adobe, so it's going to continue to do well, I think. AMD has been down. Let's see. Right now, if we look at the chart, yeah, it's been up, but then it just had a little bit of a pullback. So I think now is a great time to get into AMD. It's at 180, and I rolled to May, so closed out my Aprils. I'm staying long. I've got a 180, 170, $10 wide put spread in AMD. NVIDIA came out and introduced a new AI chip that increases performance and reduces energy consumption, and that made AMD pull back a bit. So, but I still like AMD and NVIDIA moving forward. DraftKings, we've got IB rank of 30, so good for trading options, collect more premium. The price is $45. So it actually moved up a bit. Yeah, it's at the top end of that range right there for DraftKings. And, you know, we've done pretty well in DraftKings as we've seen. Let's see. If we look at the last year, $716 over the last 365 days, but thought we had done better than that. But that fell. Hey, not bad. But I've got a call against two leaps options. So because it did move up or did move down a bit, I sold one of them, but I've still got $234 just in this leaps option alone to collect. Should it stay below that $49 level, and it's at 45 right now. And then we continue to make money on these leaps. So any up move in DraftKings next week, we've got earnings coming out May 2nd, but any up move, I'll throw on another call and make this leaps a poor man's covered call. GDX, gold miners, gold has been down and now it just slightly moved up. So you can see since we put this on, just in the last 30 days, we made that $202 just in 30 days with this leaps option. So long term, deep in the money call 26, and then we sold a call against that, and we're collecting $85 against that call, but we've already made $220 on this leaps option. And as long as we stay below that 32, which it is, then we pick up the rest of this $85. Google, I think, is a bargain right now. You know, there's some big tech stocks that are down. I looked at Amazon, but Amazon was up. Google, it's trending up, but it's gonna keep going, I believe. High IVR 63, earnings on April 23rd, but the price is 150, and my target for Google long term is like 180 to 200. So they missed on ad revenue a while back last earnings, and that's why they dropped. But any pullback anytime next week or following week, I mean, whenever there's a little bit of a pullback, I'm going to put on another tranche of a put spread and collect more premium. But Google's been pretty good. Just in the last 30 days, we made almost $600. But I think it's going to continue to do well. Same thing with the Russell. It's done well. It's at 210 right now. Still good IVR at 35, so we can collect good premium. I've got two $5 wide put spreads, and you can see we've already made $212, and that's just in the last 30 days. Oh wow, we made $374. We had another trade on, so that I closed, but $374 in the last 30 days in the Russell. I'm going to continue to stay long the Russell. It's dipped down, but it's still trending up, and I think small caps are going to do well, especially as those interest rate cuts come. LIII Harris has earnings coming up on April 25th, and I've got the 210-200 put spread. So if you look at the curve mode here, this is actually the Tasty Trade platform, this one, but 210-200, anything above that 210, we stay and continue to make money. And yeah, in the last 30 days, we made $912. So I'm going to stay long LIII. We'll see how earnings goes. Earnings are on 4/25. This April 19th is before the earnings, so there shouldn't be any significant move. I expect it to stay above this range and collect the rest of this $519 in extrinsic prior to the earnings. So I'm going to continue to hang on to this. Any downtick, I may roll and collect more premium, but right now there's no reason to. Lulu got hurt pretty big on earnings last week, and there was a drop. They beat both on the top and bottom line, revenue and the earnings, but they guided lower, and they got beat up. So I sold my put spread and got out, but I've lost money in the last 30 days. Yeah, $535 in the last 30 days. But if we look at the last 6 months, I'm still up a couple $100, so I'm not too worried about it. I thought Lulu might be a good earnings trade, but you can see right here, right after earnings, I threw on another iron condor. There's 360, 370, 440, 450 in May. So because of that big drop, IVR was still decent. I threw on another iron condor and put that right around where the price is today. So now, since there was that big drop, I don't expect there to be much of a move. It dropped for a reason. It dropped due to the poor guidance. So it's not going to rocket up, all of a sudden the guidance is good. No. So it's going to stay in that range. And because it dropped big, I don't think it's going to drop too much more. So that's why I went ahead and put another one on. I do that sometimes. And then, we can collect more premium. So you can see I closed that one out, and yeah, and you can see where I put on that the May iron condor. All right, Mara is a Bitcoin mining company. It's kind of a high flyer, so I just threw that on. It was interesting to me. I did a video on it, but IVR is 30. It's at 22. With the Bitcoin halving coming, I think that Mara can do well. I know that they get less for mining stocks, but if the Bitcoin price increases as it normally does at that, after the halving and prior to the halving, Mara has a ton of Bitcoin right now, and then they can sell some as it continues to do better. So they've got a whole strategy in place. They're one of the bigger mining companies, but I'm pretty break even. I think I'm down $35 just since I put this on. ServiceNow is a great cloud-based company. I've got an Iron Condor 680 to 840 in ServiceNow, and we have $69. I've already made $260 just in the 30 days. Yeah, 216 in we just made this in the 30 days, but we've got earnings coming on 4/24. So this is prior to earnings, so I could hang on and collect that 69. I think it's going to stay prior to earnings in that range, 680 to 840. But I put this on at the time. I remember IVR was very high. It's at 71, still high now. But we could go really wide, and look at that, we're right in the center. So a lot of room to move in the stock, and it's been kind of trading in that range for a little while. So I like ServiceNow. I'll probably leave this on, and then after earnings, if there's I'll probably put on another iron condor after earnings. But before earnings, I think I want to be careful with ServiceNow. I think it can move a lot. NVIDIA, I'm not going to short NVIDIA, I'll tell you that. But you can see straight up, some people still think it's fairly priced or underpriced, but I mean it's gone crazy. But I'm not gonna not be in it, and I jumped in finally after huge up moves. But you can see just recently, last 180 days, made over $300 just being long NVIDIA, and I'm going to continue to be that while it's at this price. It seems high, but actually the peg, the price to earnings to growth, because the growth is so high, that's what makes it more fairly priced. And they just came out with a new chip that, like I said, it's increasing performance hugely and decreasing energy consumption or power. Palantir, we've got a LIII option with a call sold against it, so a poor man's covered call, and we've done pretty well in Palantir. It's at $23.07 IVR. Earnings in May. On a down day, I'll throw on another LIII option, but in the last 180 days, made $574, $746 in the last year. So it's done all right. Qs, tech's been up, so the Qs, it's kind of a hedge, but I'm at 440, not too far off, So this is profitable the other way. If it stays below that 440, I make money. So I just kind of have that on there as a hedge, but I've lost $104. I may close that out or roll to May. I'll probably roll to May. I like to have some negative on, negative delta, or betting that the market's going to go down some, even to make money in both directions. SoFi, I've got some LIII options out. All of them are over a year. I think it's going to continue to do well. I think it's going to change banking, and love the stock, but it's been down in that $7 range, unfortunately, for a little while. So I'm going to stay along with my LIIIs. I don't sell calls against that because you don't collect that much for them, and I think the upside's much greater. Square is one I'm watching, and they've done great, and they're up, so I hate to have, whoa, that's SoFi. Okay, now on Square. Okay, so you can see they've been up, so I hate to get long, but I like Square, and they've got earnings coming out. What's earnings? May 2nd right here. So coming up, but I know that Jim Cramer had his the CEO on, and it sounds like they're killing it going forward. And we've done okay, I think, in 180 days. Yeah, $460, and actually that's done that in 6 months. But I haven't traded it a lot, but looking to put another one on. So I've got that placeholder for Monday. TLT and TMF, both funds, they've been down, but we're pretty close to break even. But as interest rates come down, the expectation was in June we saw, then those should do well and move up. Tesla, let's see. Tesla has been down. All the EV stocks are out of favor. They've got earnings coming up on 4/17, April 17th, so fairly soon. I was looking to roll the 160s to May and then close out the 175, 165 in April. But I don't know. We'll see how that goes. I've just got those as placeholders. I'm not sure what I'm going to do in Tesla, but you can see I'm definitely a long Tesla. I profit as it goes up above 170. And okay, Verizon is next, and you can see I own 100 shares of Verizon. It pays a huge, I think 6.6 is what it was, annual dividend. So I like to hold the actual stock to collect that dividend. And then I sold I'm looking to sell a 43 call against it. You can't collect much. It's 69 cents, 69 bucks right now. But at 43 in 43 days, they actually, I believe they've got earnings coming up. Yeah, 422 earnings. And then Wells has earnings, you can see there on 412, and then ExxonMobil on 426. So we've got the last three here with earnings in April. But let's take a look. So Verizon's done well. You can see just on this LIII option, I made $880 and then selling a call against it. I do that occasionally. So any big move up in Verizon, I'll throw on that call, thinking that, hey, it's probably not going to go up too much more. And it's been trading in that range pretty consistently. It's up a little bit, but it's probably going to stay in that range now. Wells Fargo, poor man's covered call, 60 call, 40 there, deep in the money, LIII's option, and I think it's a good bank, and it's going to continue to do well, but we profit as it stays above this, all the way down to the $52 range we profit with Wells Fargo. And then ExxonMobil, oil is up right now, I think $83 a barrel, so it's been moving up, doing well, 116. It trades in that range between, 100 and 120, and it's up at that range right now, so well, I might look to throw on a call spread, although IVR is so low right now, so maybe not. But I'm in May right now, and ExxonMobil has done well over time. I think just in the 30 days, we've done pretty well with that move up, $710 just in 30 days. So I think I might throw on call spread in May, thinking it's probably, well, geez, you can't collect that much. 120, 130. So I can only collect for a $10 wide, $158. I want to collect a third the width of the strike. Even here at $5 wide, yeah, I should be collecting, $166, but no, only $1.15. So I'm not even going to play that. I'm going to stick with my 110 put spread because I can't collect enough. All right, guys. Earnings next week. I have not even had a chance to look. I had a busy week, but if we look at all earnings here and we sort by date, wow, there's not too much next week. All right, well, keep your eyes out for videos. I'll see if I can come out with another one. I think there's some bargain basement, great stocks to purchase right now at this time. All right, guys, I put a link down below for that free options workshop. Remember to grab that. Grab your 15 free stocks with Mumu using the link below as well. Remember to hit like and subscribe. Leave a comment. I answer every question that you have, so leave a question. Let me know what you're trading, what you thought of this video, and thanks for watching. I'll see you in the next one.